Hola mi gente, welcome back to the channel. So there's a quote that I want to share with you all because I think it speaks volumes. This quote is from Billions, episode 1, season 1, and I think it's a quote that really applies to right now. The quote is as follows: he's willing to look foolish in the short term to win long term. Right now in the stock market, if you add to a position or you take on a new position, you're most likely going to be red. And you're not going to be catching the stock at its bottom. You're buying a stock while it's in a downtrend. You're looking foolish because the stock is not moving up as soon as you bought it. But that's actually a good thing. And as an investor, that's what you really want to happen with a stock, believe it or not. You don't want to buy a stock and then it just suddenly go up, because at that point, you can't build yourself a position that's actually going to make a difference in your portfolio. But needless to say, sometimes as an investor, you have to look foolish in the short term to win in the long term. And that's exactly what I think is happening right now in the stock market. You have to be willing to take the losses and be in the house of pain. This is somewhat like a renovation. Say you bought an investment in real estate. You bought a rental property or a property that you're going to be flipping. You're in the renovation phases and you are just pouring money into this project. It seems like a money pit and you're about to call it quits and just cut your losses on this investment. But you stick with it. You continue to buy the dips. You continue to put money in this money pit, and then things start to turn around. The market turns around. You finish the project and you sell this property and you make a ton of money. It's worth way more than you bought it. You put in the hard work and the time, and now you're reaping those benefits. The same concept can be applied to investing. You need to be patient. You need to put time and effort into this game. It does not come easy. It does not come quick. But boy, when things turn around and you continue to buy those dips, the rewards are going to be extremely juicy and it's going to make it all worthwhile. So with that being said, I'm done rambling about the stock market overall. Today was not a good day. We all know that. The S&P 500 and the Dow Jones were down close to 0.9%, and the NASDAQ dropped more than 1.25% on the day, which is a big drop in one given day. But let's get into Uber and how I'm playing this stock. So right now I'm sitting on 100 shares and 3 leaps that expire in January 2024 at the $30 strike price. So I'm in the money, I have some delta, I can sell poor man's covered calls against these positions. If the stock continues to fall, then my delta is going to decrease and I might not sell poor man covered calls against my Uber position. Now the premiums right now on Uber are not that high, so I'm not making much money selling covered calls against this position. And I'm also not willing to lose these shares, lose the potential opportunity, because I do believe there is tremendous upside. So I'm only collecting $5 to $10 per contract. So say $15 to $20 a week on these positions. Today I bought another leap, the $30 strike for January 2024 at $12. So I paid $1,200 for that position, and overall my current position is currently sitting at $7,500. I do plan to add more to this position if I can and the stock continues to dip. I'm not adding to it as it rises, but if we see a share price that is much lower than it is now, I definitely will continue to buy this stock. Now let's say that I add $2,500 to my position and end up with around $10,000 in Uber, and it hits my price target of $80 within the next 3 years. How much returns will I get off of this position? Well, to say that I add $2,500 with the current leaps being around $1,200, let's just be conservative and say that I add 2 leaps. So then I'm sitting at 5 leaps and 100 shares. So I have exposure to 600 shares. Because these leaps are so deep in the money, they're at a $30 strike. They're basically going to be trading at the share price. So if the share price is $80, the leaps are going to be trading for $50. Each leap is going to cost $5,000. I'm putting in $1,200 right now for that same position. So it's going to be more than a 4x return on my position. So if you're looking at a $10,000 position, depending on how many leaps I have, I said 5, and I have 100 shares, so I have exposure to 600 shares, my position at the end of the day is going to be valued somewhere around $50,000 to $60,000. Those are the kinds of plays that I live for. Those are the kinds of plays that allow me to beat the S&P 500 in overall returns. I don't get every single one of these right. Sometimes I am wrong and I don't make money on my position. But if I'm able to hit on a couple of these, if I can get one of these every single year, I am going to outperform the market. Because when you have a position that is worth 10% of your portfolio and you get 500% gains on that position, it doesn't matter what happens with your other stocks, you're going to make money. That's kind of what happened to me this year with Ford. I had leaps on Ford and now I'm up around 500% on that position. Now Ford, I did not make as big of a position, but it was still pretty decent for my overall portfolio, and I should have bought more Ford. I also did this same investing strategy with GameStop early on, but I was just learning the ropes in options trading at that point. I only put $200 in GameStop and I ended up making $21,000. And I didn't even sell anywhere near the top. If I was to hold on to my $200 position in GameStop, it would have been worth close to $500,000 if I sold at the very top, which would have never happened because every time the stock went up and pulled back, you would have thought to yourself, well, this is the top, let me lock in the gains. And if I didn't sell at all, then my position would be worth nowhere near where it would have been if I sold at the top, because as you know, GameStop has dropped a lot. But needless to say, the power of leaps. You just get one or two of these right and it will drastically change your portfolio. But they do not come quick. And when you get into leaps, you're going to see tremendous red days. It takes a lot of strength. There is a ton of volatility. You basically have to go into a position knowing, hey, I'm going to be down pretty big at some point. I can't let it affect me emotionally. I just need to let it ride. And you got to go in with the concept knowing that you're not going to get every single one of these right. But over time, if you hit on a couple of them, it's going to be well worth it. Now, going back to my price target of $80. I just needed to hit that price in the next 3 years. If it goes higher than that, that's great. I will make more money. If it's lower than that, that's okay as well. I'll just make less money, but I'm still making money at the end of the day. The risk to me is that if Uber is below $30 in 3 years' time, then I will lose my entire stake that I have in Uber minus the 100 shares. To me, that's a relatively low risk because I do believe that Uber is going to be worth more in the future than it is right now. And I personally think the company is undervalued because it's trading at below the IPO price, although the business is making way more money and has way more and is way more dynamic, has so much more potential in my personal opinion because of the pandemic and the growth that we have seen in Uber Eats, which they need to rename Uber Eats because it's not just about food. They are delivering pretty much everything out there. But you might be saying that $80, when you look at the current share price, it's a double, is out of this world. But it's not just me that's saying this. All right, so just recently, Uber stock got an $80 price target from UBS. The analyst stated that the stock's current valuation is underappreciating the company's mobility and delivery business. And they also pointed out that Uber's margin improvement and multiple expansion story with a 4 times upside to the downside skew is the most attractive in the subsector under his coverage. We also had an analyst come out and say that Uber is one of the best tech stocks outside of the FANG. But they said, and this is from Morgan Stanley, that they see 80% upside from the current levels as the company is approaching profitability. This upside is now even higher because the stock is worth less. And they gave Uber an overweight rating and a price target of $72. And if we take a look at what analysts are rating Uber technology, the high is $82, the median is $70, the low is $48, and the average is $68.94. Given that the current share price is around $35, that is almost a double based on the price targets by these analysts. And something that I really like to see, and this happened in early November or mid-November, November 19th, is that the CEO was adding to his position in the stock. He did this when the stock was trading at $44.92, so he's down on this purchase. He purchased 200 shares, and after that purchase, he owned about 1.2 million shares. So before this transaction, he was under a million shares owned. So adding 200,000 at around a million, that's a 20% increase in his overall stake, which is a huge purchase. It's not like he's just buying a little bit of shares. He's adding his position by 20% in one single order. To me, this is extremely bullish. Nobody knows Uber better than the CEO. And when the CEO of a company is bullish and putting his money where his mouth is, then that's a great sign for investors, in my opinion. And I like the fact that the CEO is adding to his position. All right, mi gente, that pretty much wraps it up for this video. This video was pretty long. I talked a ton. If you're new to this channel, please hit that subscribe button, ring that bell, and smash that like button. Also, if you like free stocks, join WEBULL. You'll get 2 free stocks worth up to $2,300. You have to use the exclusive link that I am providing down below. If you sign up for crypto trading, you will get an additional 5 free stocks. And if you refer WEBULL to a friend after you sign up, you will get an additional 5 free stocks. You're going to get a shit ton of free stocks, and it's a great brokerage, so I highly recommend it. I'll catch you all on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.